got a rally on our hands as we head into the final moments of trading right now, everyone. If you missed everything that happened during today's session, do not worry, because we're getting you caught up on the only stocks you need to know about. It's time for our top 10. Number 10, Walgreen, down nearly 6%, falling the most since December 2011. The drugstore retailer reporting third quarter profits that trailed estimates. Sales at established stores dropped nearly 4% in the quarter as Walgreen tried to win back customers from rivals, including CVS.
Yep. So Valero Energy shares are up more than 3% today after Goldman boosts its rating on the world's biggest independent refiner to neutral from sell. Imagine if they'd actually rated it a buy. Valero Energy has rallied 65% over the past year.
Adam, how about number 8, Men's Warehouse, up almost 6%. The apparel chain said it ousted its founder, George Zimmer, over his desire to take the company private and refusal to consider alternatives. Zimmer still holds 3.5% of all the shares, making him the 7th largest investor there, Trish.
Number 7 is Lennar, up a fraction after the homebuilder reported second quarter earnings that beat analyst estimates. During the quarter, Lennar saw sales and prices jump and are recovering U.S. real estate market, one we've been talking about certainly a lot today.
Number 6, so we got a little combo here. Salesforce and Oracle, I should say Salesforce up, Oracle down after the tech companies entered a strategic partnership integrating their cloud operations. The 9th-year agreement encompasses applications, platforms, software, and infrastructure.
Well, number 5, how about Barnes & Noble, down nearly 17%, sinking the most in 17 months after reporting a fourth quarter loss that was twice as wide as analysts had predicted. A large portion of that loss was fueled by the Nook segment, which saw a 34% drop in sales. I mean, I don't know about this, guys. The Nook, I remember buying one for my father for Christmas one year. I'm not sure if he still uses it or not.
Well, I mean, it's got some serious competition. Let's face it.
Yeah.
Look at that iPad.
The iPad is spectacular. I will say, having just been on a beach with my iPad, it doesn't work so well in the bright sun, whereas the Nook is better. Yeah, I know.
They're working on that.
But the Nook is supposed to, at least there are some models that are that monochrome black and whitish looking stuff, right? So it's supposed to be good.
Supposed to be.
All right. Let's move on to another interesting stock here. Netflix down more than 1%. The world's largest online video subscription service is getting cut to underperform over at Bernstein. The bearish view is fueled by increasing competition, diminishing returns on investment, and an overly optimistic market.
And Carnival, the cruise operator beset by mishaps at sea this year, it's up nearly 5%, finally up. Carnival is splitting its chairman and CEO roles, naming Arnold Donald as its new CEO and keeping Mickey Aronson as the chairman. Carnival also reporting second quarter profits that top the estimates.
Well, number 2, guys, it's the BlackBerry. Shares of the struggling smartphone maker are climbing 3%-ish after Morgan Stanley said it expects the company to meet or beat sales estimates for that new BlackBerry 10 smartphone. Remember, it was the Z first, now it's the Q. They've got a couple new models in that 10, Trish.
All right. Moving on to our number 1 stock of the day. It happens to be Sprint. Sprint trading up right now about almost 0.5% there, $6.90 a share. Sprint shareholders have approved SoftBank's acquisition of the wireless carrier company. About 98% of the votes were in favor of the $21.6 billion takeover. We're looking at a market here that's rallied triple digits there on the Dow, up significantly as well on the S&P. A lot more optimism, you could say, today, in part thanks to some very positive economic news. Home sales, new home sales coming in very strong. Case-Shiller, strongest growth we've seen ever. In the history of that index. And all of that is leading to a bit more optimism, and we're seeing sort of a return to reality, you could say, where good news is good, bad news would be bad.